5.4 Revision of Control Accounts. In grade 10, attention was given to the preparation of control accounts and debtors and creditors. Refer to Chapter 6 in your grade 10 workbook, where the focus is placed on reconciling the totals of the debtors and creditors list with the balances of the debtors and creditors control accounts. Remember that the control accounts in the general ledger are simply summaries of all the transactions recorded separately in the personal accounts in the debtors and creditors ledger. And therefore, the balances of the control accounts should always be the same as the totals of the debtors and creditors list. Here follows a short summary of transactions with debtors and creditors. 5.4.1 Transactions with debtors. We can have sales on credit to a debtor, which would be your debtors journal. We'll debit debtors control, credit sales. Services rendered on credit to a debtor, again will be your debtors journal, debit debtors control, and credit current income. We can then have payments made on behalf of a debtor. That will be our cash payments journal. We will debit debtors control and credit bank. We can have petty cash payments on behalf of the debtor. That will be your petty cash journal. We'll debit debtors control, credit petty cash. Cash received from debtors goes to the cash receipts journal. We'll debit bank and credit debtors control. Discounts allowed to debtors will go to the cash receipts journal. We'll debit discounts allowed and credit debtors control. Goods returned by a debtor will be the debtors allowances journal. We'll debit debtors allowances and credit debtors control. Interest charged on overdue accounts goes to the general journal. We'll debit debtors control and credit interest on overdue accounts of a debtor. And then debtors written off as irrecoverable, also to the general journal. We'll debit bad debts and credit debtors control. 5.4.2 Transactions with creditors. We can have purchases of credit from a creditor. That'll go to your creditors journal. We'll debit trading stock. We'll credit creditors control. We can have payments made to a creditor. That goes to your cash payments journal. We'll debit creditors control and credit bank. Discount received from a creditor goes to your cash payments journal. We'll debit creditors control and credit discount received. Goods returned to creditors goes to your creditors allowances journal. We'll debit creditors control and credit trading stock. And interest charged on overdue accounts, it will be your general journal. Interest on overdue accounts of creditors will be debited and creditors control will be credited. 5.5 Age analysis of debtors and creditors. When sales are made to a debtor on credit, an agreement is made regarding a date of repayment, referred to as the credit period. These terms refer to the time given from the account statement date that the debtor must settle the debts. For example, 60 days means the debtor must settle the account within 60 days of an account being sent out. Furthermore, the credit worthiness of each debtor is checked to establish a credit limit for each debtor. The credit limit refers to the maximum amount for which the debtor may purchase on debt. Each debtor's credit limit is calculated based on his personal income and expenses of each month to determine what he will be able to afford to repay each month. Before accounts are sent out to debtors, an age analysis of debtors' accounts is done for internal control purposes to determine which debtors exceed their credit term and are in arrears with their repayments, so that it can be determined whether some of the debtors may need to be written off as bad debts or handed over to attorneys for collection. Thorough checks on debtors should also take place to ensure that none of the debtors exceed their credit limits. Example 3. White Stores sells goods for cash and on credit. Their credit period is 30 days and it is expected that 80% of debtors will honor these terms. Required 3.1. Calculate the correct balance of the debtors control accounts on 31 May 2025. 3.2. Draw up the correct debtors list on 31 May 2025. 3.3. Refer to information 1 and 2 below and answer the following questions. 3.3.1. Does White Stores have good control over debtors? explain by referring to figures. 3.3.2, provide two measures that can be taken to encourage debtors to honour the terms. Information, number 1, a debtor's age analysis for April 2025 is given for 30 days, 60 days and 90 days. Number 2, the balance is according to the debtors list on 31 May 2025 with all the names of the debtors, the amounts they owe and their credit limits. And 3, the balance of the debtors control account on 31 May 2025 is 167,500 Rand. Information 4, the following errors and omissions must still be corrected, and I will read 4A till F as we complete the question. 3.1, calculate the correct balance of the debtors control account on 31 May 2025. So we're going to start with our opening balance from information 3 of 167,500 Rand. Then if we go to 4A, the debtors journal was understated with 4,100. So because it's understated, it means we still have to have 4,100 Rand in our debtors control account. So we'll have to add 4,100 Rand. Then 4D, an invoice sent to Al Nadi for 2,300 was not entered in the books. So it's obviously going to increase the debtors control account. So we will add the invoice of 2,300 Rand to our debtors control account. And then E, an EFT payment 4,500 Rand received from R. Fedi was incorrectly recorded in the cash receipts journal as 13,500 Rand. So we recorded that a debtor paid us too much. So obviously, what is the difference? 13,500 minus 4,500 gives you 9,000 Rand that we have to add back to our debtors control. So then if we work out the balance of our debtors control, it will be 182,900 Rand. 3.2. Draw up the correct debtors list on 31 May 2025. So firstly, you write down all the names of your debtors and their opening balances before any omissions or errors. And this you get from information 2. So our debtors are R. Nadel, B. Shunga, Al Nadi, K. Stark, and R. Petty. And then you start with in brackets all the amounts they owe. So 46,500, 31,800, 27,000, 63,200 and 8,600 respectively. And then we are going to read the errors and omissions from information 4 to see if some of these debtors amounts needs to be corrected. If we go to adjustment 4C, goods returned by R. Nadel, 1,400 Rand, were posted to the wrong side of his account. So normally if a debtor returns goods, it's going to go on the credit side of his account. But obviously it is now on the wrong side, so it was entered on the debit side. So to fix the error, we're first going to credit R. Nadel's account to square the amount, and then we are going to do what we were supposed to have done, and that is credit his debtors control account. So 1,400 times 2 is 2,800 Rand, which we will minus from his amount owing. So now he only owes 43,700 Rand. Information 4B, goods sold on credit to R. Petty were incorrectly posted to the personal account of B. Sunga, 7,600 Rand. So in other words, the 7,600 Rand does not belong to B. Chunga. So we need to subtract that amount from his amount owing. So if we say 31,800 minus 7,600, we get an amount of 24,200 Rand. And then we've got to go to R. Petty's account and add the 7,600 Rand that belongs to his account. Information 4D. An invoice sent to Al Nadi for 2,300 Rand was not entered in the books. So in other words, we need to add a 2,300 Rand invoice to Al Nadi's account. So if we add 2,300 to 27,000 Rand, the balance owed now is 29,300 Rand. 4F, goods sold on credit to K Stock, 4,700 Rand, were correctly recorded in the relevant subsidiary journal, but the amount was posted to his account in the debtors ledger as 7,400. So what is the difference? What is 7,400 minus 4,700? You get an answer of 2,700 Rand. So that amount needs to be taken off from his account. So what is 63,200 Rand minus 2,700? That doesn't belong to his account. You then get an answer of 60,500 that he now still owes. 4E, an EFT payment of 4,500 Rand received from R. Peddy was incorrectly recorded in the cash receipts journal as 13,500. So in other words, in our journal, we showed that the debtor paid us back too much. So what is the difference? What is 13,500 minus 4,500? That amounts to 9,000 Rand. So 9,000 Rand needs to be added back to R. Peddy's account. So then his new balance owing is 25,200 Rand. So our correct total for our debtors list is now, if we add all these amounts together, 182,900 Rand. 3.3.1. Does White Stores have good control over debtors? Explain while referring to figures. No. R. Nadel and K. Stark owe more than their respective credit limits. 127,500 divided by 187,500 equals 68% of debtors that do not adhere to the credit terms of 30 days and are in arrears with their payments. 3.3.2. Provide two measures that can be taken to encourage debtors to honor their terms. Allow discount to debtors who make early payments, charge interest on overdue accounts, and conduct more debtors' age analysis in order to determine debtors that might cause problems earlier. 5.6. Reconciliation of creditors' accounts with creditors' statements. When credit transactions occur between two parties, the seller and the buyer will both make an entry of each transaction in their books. However, it could happen that one of the parties has already recorded a transaction that the other party has not yet taken note of, or simply has not recorded yet. As in bank reconciliation, a creditor reconciliation statement is drawn up for the internal control purposes only, to explain the variances between the creditor's statement received from the creditor and the accounts in the creditor's ledger. 5.6.1. Reconciliation of creditor's statement received with the accounts of the creditor in the creditor's ledger. As already mentioned, all transactions that take place between two businesses are recorded in the books of both. The business that supplies the goods and to whom money is therefore owed is the creditor, while the business to whom the goods are supplied and therefore owes the money is the debtor. The balances of the amounts owed should be the same in the books of both businesses. However, this is not always the case. Reasons for this could be the following. An EFT made to the creditor does not yet appear in the statement of the creditor and just has not been recorded yet. Invoices for goods that have already been recorded by the creditor have not yet been received by the debtor. Goods returned and already recorded by the debtor have not yet been received by the creditor or have not yet been recorded. Errors could have been made on the creditor's statement or on source documents, or in the entry of transactions in the subsidiary journals. The purpose of reconciliation between the creditor's statement received from the creditor and the corresponding accounts in the creditor's ledger is to explain and clarify any discrepancies. 5.7. Ethical considerations. There is an expectation that businesses and the employees will always act ethically and in accordance with certain norms and values. However, one aspect which causes concern and requires more attention when it comes to deciding which suppliers to use is the corruption surrounding so-called kickbacks or bribes that are accepted for using certain suppliers for certain products or services. Usually, a supplier will provide an employee of a business with some kind of kickback, which is a personal benefit to the employee. If such employee can influence a decision that will ensure that the specified supplier is awarded a contract. Usually this supplier does not necessarily offer the best price or service. Both parties are acting unethically. The supplier who offered the bribe and the employee who accepts it. This has a harmful effect on the economy since it counteracts healthy competition in the market and raises suspicion regarding the creditability of a tender process and the ethical behavior of employees. 5.8. Internal audit and control processes pertaining to debtors and creditors. 5.8.1. Control of debtors. The internal control process relating to debtors must ensure that debtors are creditworthy, that credit sales are recorded properly, that reconciliation is done between personal accounts and the control accounts, and that outstanding accounts are managed. The following are examples of mechanisms that can be of use. There must be a credit policy in place where debtors are approved. Credit controls must be performed regularly to identify overdue debtors. Credit sale transactions must be approved in terms of price, payment, credit available, and limits on the debtor's accounts. All credit sales must be comprehensively recorded on pre-numbered credit sales invoices and signed by the salesperson. It must be possible to account for every invoice number. Monthly statements to overdue debtors must be evaluated and sent out by someone other than the bookkeeper. The balance of the debtors' control accounts in the general ledger must be reconciled with the total of the debtors' list in the debtors' ledger at the end of each month. Bad debts and other adjustments pertaining to debtors must be properly authorized. Interest must be charged on overdue accounts of debtors. The internal auditor must check debtors for recoverability to decide if the provisions made for bad debts are adequate and if this might need to be adjusted. 5.8.2. Control of creditors. The internal control process relating to creditors must ensure that credit purchase invoices received from creditors correspond to the item received, as well as that they have been accurately recorded. Reconciliation is done with creditors' accounts and that the amounts payable are continuously monitored. The following are examples of mechanisms that can be of use. Purchase price and the accuracy of the invoice received from creditors must be checked. The number of goods received must be checked by ticking them off on the invoice. Negotiations must take place to secure the best possible term and discount. Invoices must be thoroughly checked and recorded before being paid. For example, they can be stamped. The same person must not be responsible for both purchasing and receiving goods. Creditors' accounts must be paid as late as possible without incurring interest. Example 4. The following information relates to Brooklyn traders on 31 May 2025. Required. 4.1. Explain why it is important to draw up a monthly creditors reconciliation statement. 4.2. Compare the creditors statement received from a creditor Perry Stores to their accounts in the creditors ledger of Brooklyn traders. 4.2.1. Draw up the complete account of Perry Stores in the creditors ledger of Brooklyn traders and clearly indicate the adjustments and corrections. The account must be started with the incorrect balance. 4.2.2, draw up the creditors reconciliation statement on 31 May 2025. So then information 1, the creditor statement received from Perry Stores is given. Information 2, the creditors ledger of Brooklyn Traders is given. And then question 3, a comparison of the creditor's statement received from Perry Stores to their account in the creditor's ledger of Brooklyn Traders brought to light the following errors. And I will read errors A to D as we complete the question, as well as errors E, F, and G. 4.1. Explain why it is important to draw up monthly creditor reconciliation statements. This enhances internal control and prevents fraud, as each individual creditor's account is compared to an external source, which is the account statement received from the creditor. It explains the difference between the balances and ensures that corrections of errors are made and omissions are tracked against the latest account statement received. Creditors can be contacted on time if any errors are found on the account statement, in which case corrections can be made before credit limits are reached or interest on overdue accounts is charged. Now we've got to complete the creditors ledger of Brooklyn Traders. Now the first mistake in the creditors ledger, if you go to invoice 100 on May the 3rd, in your creditors ledger it's 5,900 and in your creditors statement it's 9,500. So the amount is incorrect. The difference of 5,900 and 9,500 is 3,600, which needs to be credited. Okay, so we start with our incorrect balance of 37,000 from our creditors ledger, and then we're going to say invoice 100 corrected, 9,500 minus 5,900 gives you 3,600 in the credit column. So our new balance will be 37,000 plus 3,600, which is 40,600. Then invoice 109 on 23 May 2025 was an error by Brooklyn Traders in the creditors ledger. The goods were not purchased from Perry Stores. So we need to debit the creditors ledger. So we're going to say debit faulty invoice 109 in the debit column 5,990. So our new balance will be 40,600 minus 5,990 to give you 34,610. And then lastly, the interest on overdue accounts appears in the creditor's statement but not in the creditor's ledger. So we need to record that into our creditor's ledger. Interest on overdue account, it's going to go into the credit column 1,590. It's going to increase the balance. So 34,610 plus 1,590 gives you 36,200. 4.2.2 Creditors Reconciliation Statement of Brooklyn Traders with Perry Stores. Firstly, to be able to complete the creditors reconciliation statement, you need to familiarize yourself with the format. So it will also be whatever balance according to the account statement. Then you'll have any credit discounts omitted, any debit faulty errors, any credit faulty errors. So either any credit or debit errors, either an invoice that's omitted or a credit note or a return, and then any debit invoices after the statement date, any credit debit balances after the statement date, and then your credit balance according to the creditor's ledger that we've just calculated, which will be the 36,200 Rand. The balance according to the account statement, if we go back to information 1, is 45,000 Rand. So we'll enter that. So it's a debit balance, 45,000. Then if you compare the statement to the ledger, you'll see that the credit discount was omitted of 2,200 Rand. So we must put that back into our statement. So in the credit column, we will have credit discount omitted, 2,200 Rand. Information 3C. Credit note 533 was incorrectly credited on 18 May 2025 by Perry Stores on the account of Brooklyn Traders. The goods were returned by a different business. So we need to go and correct that in the creditors reconciliation statement. So we're going to say debit faulty credit note 533, and then we're going to debit the account with 1,600 Rand. 4D, invoice 449 on 22 May 2025 was an error by Perry Stores on the creditor's statement. The goods were sold to Brooklyn Supplies and not to Brooklyn Traders. So we will have to credit the creditor's reconciliation statement. So we're going to write credit faulty invoice 449, and in the credit column 8,180 is the amount for invoice 449. 4F, trade discount of 10% was approved on the goods purchased on 27 May 2025 per invoice 460. However, this was not taken into calculation by Perry Stores. So if we go to invoice 460, the amount is 9,200, but a 10% discount was approved. So what's 10% of 9,200 Rand? That's the first calculation that we need to do. That's going to give us 920, which we will credit because it was omitted. And then after comparing the creditor's statement to the creditor's ledger, after statement date, the following errors were detected. We're going to debit invoice 119 after the account statement date. So invoice 119 is 3,772, and we're also going to credit the debit note of 145 after the account statement date. So in the credit column, credit note 145 amounts to 2,872 in the credit column. Our credit balance according to the creditor's ledger from the previous question was 36,200 Rand in the credit column, and then we have to add the debit and the credit columns, and if it balances, then we know our creditor's reconciliation statement is correct. And if we add up the debit column and the credit column, then we get an amount of 50,372 Rand for the debit and the credit side.